Simplicity is the prerequisite for reliability. Edsger Dijkstra. My friends, that is exactly what we do. That encompasses our goal very precisely in the wording. Simplicity for reliability. What do we see in these markets? We see everything going down for the day as this week ends. By the way, markets are not open on Good Friday, so this is the weekly review and forecast. You are getting it early. What am I going to do for y'all tomorrow? I'm going to introduce you to the TradingView platform that I have been using lately because of all the market agitation and I think where we are going in the future. I have been designing a different platform, a different thought process, a different way for you to consider practice trading. And it encompasses and uses what we've been teaching on the last two most important trainings I've put out to date. Average true range, using that to set your profit and loss bands, and also the always winning strategy. So if you haven't listened to those, I'm going to put them at the end of today's video. Please be sure to listen to them. I will endeavor tomorrow to produce for you the initial training. Now, again, it's not a market day, but I will endeavor to produce for you that initial training so that you will have an idea as to where we are going in the future as we change things up a little bit. I say over and over to you guys, what matters is what works. And this new method is working wonderfully well. I want to introduce you to it. I'm going to work on that tomorrow. Now, let's jump into these charts. I'm looking at total red. Everything is red. The S&P 500 is down 1.25% for the day. Nasdaq 2.29. Red down candle ending the week. Price percent oscillator pulling away from the red signal line. What does that mean for us? It means a weekly vertical crossover, doesn't it? Yes, it does. Going down. Again, bizarro world that we live in. War in Europe. Inflation that we've not seen since, the 70s? And oil prices through the roof. People haven't been working for a couple of years. I mean, the whole real estate bubble, stock market bubble, just bubbles, bubbles, bubbles everywhere. Well, if you haven't listened to that wonderful Jim Rogers interview that we shared with you, it was so good. I don't think I've ever done that before, shared someone else's interview. I shared it with you. I really, really encourage you to listen to it. It is extremely important. I will actually put it in the show notes today. So look for it, those of you who are subscribers. If you're not a subscriber, you need to be one so you get all the stuff that we do provide to you. So we see, and again, check this out, even though the price percent oscillator is pulling away from the red signal line, derivative oscillator still quite positive because of those two strong weeks running up to where the crossover occurred and then everything started to die on the vine. Look at the 2-day. We have 6 full days of down movement. And then, of course, the last 2-day candle is also heading down, turning red, and check it out, trying to cross over, going down. And this will probably be it for the candle. The way that I have seen over and over again that the platform works here is when you have these off days, that typically ends that candle. So that is going to end up being for us a 2-day recross at the same time of the weekly vertical crossover going down. What does that portend for us? Well, it portends continued down movement, big shorting. Now, the derivative oscillator, as I said, has popped over solid red. We see on the half-day indecision in the morning and then down further, right down that half-day trend line that has been trending down for quite a while. Now, That's where we are on the S&P 500. Lots of negativity. Double that when we go to the Nasdaq 100 as far as down movement for the day. Never did cross over, pulling away from the red signal line. Still heading down on the weekly as it had been. Big down candle for the week. The derivative oscillator, though, note, is still positive. Go to the 2-day. Crossed over quite strongly going down. And we'll go ahead and note that. We'll go ahead and move the 2-day arrow to reflect the down movement. And of course, we will move the trend line, which is heading down. So again, derivative oscillator quite negative like the S&P. Go to the half day, things moving down quite strongly. We will redraw that half day trend line a little bit, seeing what can we connect. We can grab 3 candles there, 4 candles. That's pretty good. Okay, and derivative oscillator still losing some downward momentum, but that price percent oscillator heading down. So overall, what do we see as this week comes to a premature close? Well, weekly vertical crossover on the weekly chart. 2-day recross. We see a weekly vertical crossover, 2-day recross on the Qs. So again, lots of downward momentum when it comes to both the S&P 500 and the Nasdaq 100. Let's move away, go to bonds. Bonds down for the day a full 2%. Biggest red down candle we've seen in bonds for quite a while. Bonds just hammering down. Price percent oscillator dropping over the deep end. Derivative oscillator gaining downward momentum 2-day. Again, you can just see right down that hammering down trend line. We had that 2-day recross back on Monday the 14th of March. And but for a couple of spinning tops as far as green open box candles go, everything has been down, particularly over the last several days. Just a hammering down half day. Again, you can see where things slid sideways a little bit for a couple of days. Other than that, over the last many days, going down, strong down movement on Thursday. That is where we are on bonds. That 2-day recross still in effect. It has been very, very good for you who've been shorting bonds. What do we see on gold? Well, gold pulled back some on us today. We look at the half day. We'll go from the half day to the weekly. We see a green up candle that's formed for the week. Price percent oscillator heading up. Derivative oscillator green, but still losing upward momentum 2-day. We can see where things slowed down after some acceleration in up moves of the prior 4 days. But on Thursday, with that down movement, just 0.33%. But we did have a slowdown in the up movement and didn't have a crossover going up. We were hoping for that. Maybe that'll happen on the Monday, Tuesday candle. What do we see on the half day? Broke through that trend line that was moving up down in the morning, recovering a little bit in the afternoon. Price percent oscillator flat. Derivative oscillator green losing upward momentum. So we'll see if gold can get its act together and maybe have that 2-day recross going up at the beginning of next week. Put that in your show notes. Lastly, we'll go to Bitcoin, and depending on where you look, Bitcoin on grayscale, Bitcoin down 2.36%. We look at our Bitcoin futures, BITO 3.08, BTF 3.14, XBTF 3.08. So as we look at Bitcoin dying on the vine also, didn't cross over going down yet, but a down move there. We look at the 2-day, that's where you can see that 2-day crossover going down. That happened back on the 2-day candle ending on Wednesday the 13th. And again, more down movement. Not, again, a couple of 3% depending on the chart you look at, the exchange you're using or the future you're looking at. But again, pulling away from the red signal line on the derivative, on the price percent oscillator, derivative oscillator gaining downward momentum. And on the half day, we'll go to XBTF. You can see where on Wednesday things popped up some, but then rolling back over, going down on Thursday. Price percent oscillator tracking down a little bit. Derivative oscillator still negative, losing downward momentum. Boom. That's where we are, folks. Tough marketplace. But if you know what you're doing and you are paying attention, there's always something to do and something to make money on if you gain that sophistication. Being able to short things, understanding inverse funds, puts, options, all the possibilities are available. It just takes the expertise. How do you get that? Time in the market. I can't wait to bring you the special training tomorrow. I think you're going to really find it fascinating. I do want to give you a caveat. Don't get bent out of shape if you don't totally understand everything that's going on. It's a new way of thinking, but I think it will serve us all well as we move into a crazier and crazier world. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.